Haibin Zhu is JPMorgan chief China economist. Now, they've been cutting their growth forecast for China again. Was 8%. Now they reckon they're going to have 7.7% growth this year. Well, let's get the thoughts indeed. Haibin, thank you very much indeed for joining us. Okay, well, it came out of surprise. It was a big surprise. Everybody who's been sitting where you are this morning, I've been asking the question, does the People's Bank of China know something that we don't? And the resounding answer has been yes. So what's your view?
Well, I think the earlier than expected interest rate cut definitely, I would say, is suggesting that China's is the near-term rising downside risk. And in our forecast, the second quarter, the growth will be even slightly lower than the already disappointing data in the first quarter.
Absolutely. And many people in the first quarter were suggesting, well, maybe the first quarter sees the bottom, but they've quickly shifted and said, well, maybe the second quarter's the bottom, maybe in the third quarter we'll get the bottom. When will we actually get the bottom?
Well, see, obviously one reason yet for the disappointing April data is that the policy easing has been behind expectation or behind the curve. So I'll say that the surprising interest rate cut, that's a positive news that the PBOC now is ready to start the engine again and to stimulate the economy. And we expect also on the fiscal side, the government will try to push through more fiscal stimulus to ensure the stable economic growth in the second half.
What is it actually that is causing the slowdown for the Chinese economy?
Well, there are two most important reasons. I think one is that on the domestic side, the government has been paying a lot of attention on the economic restructuring, so that means tightening in the real estate market, in the steel industry, in the automobile industry, and that caused slowdown in the domestic demand. And on the other side, the external side, of course, the euro area, the rising uncertainty caused the slowdown in the export side. Okay,
so do we get more interest rate cuts?
Yeah, we think that it's still likely that in the third quarter, with the rising uncertainty in the external side, and also inflation will continue to go down in the third quarter.
Or do they go back to doing more triple R cuts, the reserve requirement instead?
Yeah, we think that will be more RR cuts coming. Yeah, the two more RR cuts in the third quarter and one more interest rate cut in.
All right. But, where does this actually leave the economy itself? You say that they've been behind the curve. Have they left things a bit too late?
Well, if you think about it's time to catch up. And remember, at the beginning of the year, the government talking about the proactive fiscal policy and the prudent monetary policy. I would say right now is really time to implement this policy to ensure the growth.
Okay, this is the monetary side of things. A lot of people were suggesting that we wouldn't have a rate cut throughout the course of this year. We'd get reserve requirement cuts and that sort of tinkering. So you're also predicting a further proper interest rate cut later on this year. Do you think more needs to be also done, not just monetary policy-wise, but on the fiscal side?
Yeah, absolutely. Yeah. Fiscal policy, in our view, will play a more active role, and actually is more important to stimulate the China economic growth.
And it's quicker to act as well.
Yeah, it's also, the two main advantages. One is that the quick impact on the economy, and the second is it's more targeted easing. So you can select basically the areas that government want to stimulate more than the other areas.
So what would they actually do you think, on the fiscal side?
Yeah, we think the most important part was still the investment, particularly the infrastructure investment.
Which we're seeing, aren't we? I mean, it is a stimulus in orbit name.
Yeah, we have seen some recent progress along that frontier. Of course, the next step is that most important part is that how fast this money will be allocated to start this investment. Yeah. And other investment, the government also talk about the tax cuts and also the consumption stimulus package. So these are on the fiscal side.
And of course, that's also designed to help rebalance the economy towards, of course, a consumption-driven, a domestic demand-driven picture.
Yes. Yeah.
Okay, but amongst all this, and, it's not been talked about very much. If I was talking to you this time last year, I'd probably be starting off with what happens next with the RMB, the yuan here. Now, not much has been happening really of late.
Yes, the RMB, the exchange rate has been quite flat and fluctuated within the small band in the past months. And one reason, of course, I would say the export sector is facing a stress condition in China at this moment, and that I would say the fundamental reason to have behind the exchange rate movements. And for this year, we expect the RMB to stay unchanged for the rest of the year.
And you're looking at what, 6.3 basically against its American counterpart. Now, yes. But going to the data that we have out tomorrow, what is going to be the single most important point that you're looking for?
The fixed asset investment, I would say that's a key to look at, and also the IP. So these are the two most important data, I would say.